thing that is making you money on winning days is the same thing that is losing you money the next day. The market is literally different the day after a good day. So if someone had have told me this back then, this would have saved me so much stress. In this video, I'm going to tell you how to stop losing in trading. Obviously, losses are a part of trading, so unfortunately, I can't help you to completely stop losing, but I can help you to reduce your losses. So this video is for you if you are a break-even trader. So if you're making big wins, but you're making just as many losses, or you're making a big win and then you're trading away those wins, although you probably feel like everything's completely hopeless and pointless, you're actually doing a lot better than you think, because if you're able to make the big wins, all you really have to do is reduce those losses. So I wanted to make this video for you because I remember how difficult this stage of the trading journey is. It really is just before you become a profitable trader, but at the time it doesn't feel like it. So I hope this video is going to change your life. So just quickly before we get started, if you are new to this channel, welcome to Trading Angel. My name is Caroline. I'm an indices trader, so I trade the Dow Jones and the Nasdaq in the New York session. So if you are trading the US indices, then this video is going to be particularly useful for you. If you're trading any other market, then a lot of the principles will still apply, but I can't speak for every market, so you are going to have to do a bit of your own research. I've been trading myself since 2015, so around 10 years. I've been coaching traders for around 5 years. I've coached over 100 traders one-to-one. And a lot of the time when the traders come to me for coaching, they're already excellent traders and they are making big wins and they're almost experts in technical analysis, but they're still struggling to move from break-even to profitable trader. So I really understand that this part of the journey is a really significant part where a lot of traders almost get trapped and a lot of them actually give up at this point. I have been coached by institutional traders myself, so some of the information in this is going to be a reflection on that. I also have a DIPFA qualification, which is a diploma for financial advisors at level 4 from the London Institute of Banking and Finance, but please note that nothing in this video or any other video should ever be taken as personalized financial advice, because I'm not currently working as a financial advisor. It's just to let you know that I am qualified and experienced to a certain level. So let's start off with some really simple maths to prove that you are doing better than you think. If you're making 1,000 points in profit in the month, and you're also losing 1,000 points, you're a break-even trader. If you're making 1,000 points and you're only losing 250, suddenly you're a profitable trader. So all we need to do is to help you reduce those losses, and there are some really specific things that you can do to easily reduce your losses. The solution is to do less to make more, and I'm going to show you how. So if you are excited to learn, make sure you hit the thumbs up button before we get started. This is the thumbs up button that you need to hit, and this is me smiling because you hit it. So the first thing that we're going to look at is that the thing that is making you money on winning days is the same thing that is losing you money the next day. And that's for two reasons. First of all, you are different. And second of all, the market is different. So I can explain why you're different, and I can show you how the market is different. So you're going to be different because you are feeling confident. You just had a nice big winning day and you made lots of money and you feel like you're the best trader in the world and trading is super easy. And if you can just do this every single day for the rest of your life, you're going to be a millionaire. So that's how you're feeling the day after a big win. So you feel more confident, less risk averse. You feel like it's easy, so you're going to be less focused on risk management. But also, the market is literally different the day after a good day. So if someone had have told me this back then, this would have saved me so much stress. That the market is different on different days. And you probably know that, and you've probably noticed it, but sometimes unless someone outright tells you what those days are, it can take a little bit longer to figure it out by yourself. So that's what I'm going to do in this video. I'm going to tell you what those days are and how it's different, and I'm going to show you I do know what I'm talking about. So in this particular example, I do get that July the 4th was Independence Day. So I'm not ignoring that fact. The market was going to react differently anyway. And July the 3rd was NFP. I understand that. This was just a recent example from the last week where there was a good example of it, but it does still do this on other days. So I'm going to explain what it is. So this is a screenshot of my MetaTrader. So you can see on this one, I made 3 attempts to get into a buy position. And on the 3rd attempt, I got in and I made a nice amount of points. So the first attempt, I got stopped out at break even. The second attempt, I made a small loss. I think this would have been about 20 points. And then on the 3rd attempt, I got in, I made around 120 points. I took partials halfway, and then I took the remainder up here. So what made me money on this day was the fact that I did take 3 attempts, because I only made money on the 3rd attempt. But can you see how the very next day, if I'd applied that same logic to keep trying until I get into a trade, can you see how there was absolutely nothing for the whole day? Now, I know it was the 4th of July, so things do happen differently. This is actually, although this was an example from this last week, this is literally what the market does look like on other days after it looks like this the previous day. So I'm not ignoring the fact that it was Independence Day and NFP, but this is still how it looks. I've traded for a long time, and this is still how it often looks the day after it does this. So I call this, if this wasn't NFP, I would have called this an unexpected unicorn day. And what that means to me is basically something happened and it was unexpectedly better than I thought it was going to be. If this had happened unexpectedly, if Donald Trump had said something and the market just shot up, or something unexpected had happened, then I would have said this is an unexpected unicorn day. And the day after, I would still expect it to look like this, because this is very frequently what happens the day after we have a nice trending market here. So can you see how if the day after this day, I'm feeling confident, I'm feeling rich, I'm feeling like I'm the best trader in the world, and I remember the fact that a couple attempts to get in failed, and then eventually I got in and it made me a nice sum of money. If I take that logic to the very next day and I keep trying to get in, all I'm going to be doing is taking loss after loss after loss. I do have a 3-loss limit. However, it is very common for traders to ignore that, ignore their own rules when they go on tilt, especially if they're feeling overconfident from the day before. So that combination of you feeling overconfident, starting the day feeling rich and like you're the best trader in the world, and then also the market literally behaving differently. That is a deadly combination, and that is why you're trading away your wins. So now that you understand that the market behaves differently and you behave differently after the market's made a nice move, now we're going to look at the specific times of day and the specific days of the month when you want to reduce your trading or not trade at all. So this is going to specifically apply to the US30 and the Nasdaq. However, probably still applies to any US dollar pairs, probably applies to gold, although I don't trade Forex and gold anymore. So I couldn't say with 100% certainty, and it would be worth back testing and having a look yourself if you trade any other market. But definitely for the US30 and Nasdaq, the days and times, all times are going to be in UK time because I live in the UK. So trading days, the day after an unexpected unicorn, which, as you know before, is a day which you weren't necessarily expecting there to be a big move, and there was. So when some news came out overnight, or Donald Trump says something, or something unexpected happens and the market makes a big move, that's an unexpected unicorn day. On the US30, I would consider an unexpected unicorn day to be something like 500 to 1,000 points. So if the market moves in one direction for 500 to 1,000 points, you can classify it as an unexpected unicorn day. Also, the day after a particularly good trading day. So this one's going to be a little bit more personal to you. It's not necessarily that the market had a great move, which was unexpected. It's that you did particularly well. And this is going to be something which you can adjust as you progress as a trader. But what I found is that because I'm feeling more confident the day after a particularly good day, sometimes it's a good time just to reset and almost think about your account balance differently. So I call it the new zero. So when you increase your account balance, you want to think of the new number as actually being zero rather than thinking that you now have however many more £1,000 to spend on whatever, or that you can be riskier with your trading because your account is so much more in your favor in profit. But actually think of that new number as being zero. And sometimes I actually find that taking a day off to allow that new number to settle in my mind as being my new zero is actually beneficial. If I go in the day after a particularly good win, I'm more inclined to think of my 0 points as the number that it was the day before. So 2 days before big news like NFP, CPI, or an interest rate decision. For NFP, definitely the Wednesday and Thursday before NFP are really good days just to plan as a day off. Very similar to what I showed you before, the one that I showed you on Independence Day. It can look like that up to 2 days before NFP and CPI, and also an interest rate decision. You're going to get the odd day when it has a really nice move on the Wednesday or the Thursday. This is before NFP I'm talking about. CPI usually comes out around midweek. But you're going to get the odd Wednesday before NFP when the market makes a really nice big move and you're going to feel like you missed out. But I think it's actually better to miss out on a good move than to try to trade when it's difficult. So wouldn't you just rather have a day off and be happy for everyone else who made money that day and know that in a couple of days' time, there may be another big opportunity for you? So I would rather just take off the couple days before any of the big news events. And if there's a big move that happens and I missed it, that's fine. Also bank holidays, again, you're going to get the odd bank holiday when there is a nice move, but on the whole, they can be really tricky. So I say, just enjoy the day off, spend time with your friends and family, do anything else, but it's not always worth sitting in front of the charts because it might just end up being choppy. So specific times immediately after a big win. So I'm going to use an example on the US30 and Nasdaq again, but typically over the New York session, which runs from 2:30 UK time to 9 o'clock, there tends to be around 2 big moves that are worth getting into. That's in a 6.5 hour period. They don't tend to be immediately after each other. What's more typical is that you have a big move and then a consolidation and then another big move later on in the day. Some days there are going to be 3 or 4 big moves, but that's not typical. So again, I'd rather miss out from time to time than try and trade every day and end up getting caught in a consolidation. So if I make a big move immediately after the open in New York, I will just leave it until the second half of the day, because what's typical is that straight after it actually consolidates and there can be some false entries in that time. Between 4:30 and 5:30, so this is UK time, if I'm trading the New York session, this is typically when New York has their lunch. So often the market does consolidate in this time. And it kind of ties into this one as well, because usually there's a big move, a consolidation, and then another big move. And usually between 4:30 and 5:30, it's not great. When the Fed Chair Jerome Powell speaks, often this can be really choppy. So again, just book some time off. And just before the interest rate decision. So the interest rate decision is kind of interesting because it's the only day of the month when the news comes out in the evening, if you're in the UK. So it comes out at about 7 o'clock. So the market opens at 2:30. and then you've got a whole 4.5 hours until the news comes out. I usually just take that off and only start working from 7 o'clock. So that day is different from all other days. NFP and CPI usually come out at 1:30 in the afternoon. So if you made it to the end of this video, then well done. If you'd like an economical calendar cheat sheet for July, you can email info@tradingangel.co.uk. I like to print it off and physically write on the days that I will or won't be working, and that can help me plan the month ahead. Obviously, every month is going to be slightly different, so it's good to be aware of where you're at. I will also say that I get that it's really tricky when you are at this stage in your journey, because usually you have a day job or another job, which is obviously paying you money. And because you're not making money from trading yet, it can be quite difficult to fit trading in. I would always say to prioritize the job that you have at the moment that's paying you money, because although I hope that all of you are going to be profitable traders at some point, the statistics literally say that 75% do lose money. So only 25% are likely to ever go on to be profitable. And also you don't know when that's going to be. You don't know if that's going to be this year, next year, or in 2 years' time. So always prioritize the job that you have that's paying you at the moment and fit your trading in around that. And you can use this to strategically decide which days and times you're going to be working on, but don't feel like you have to trade every day and every time, because as I've shown you, actually trading less can be better for you. And if you only make one win in the whole month and no losses, then you're doing a lot better than 75% of traders. So if you want a copy of the July calendar for 2025, then you can email info@tradingangel.co.uk. This is also the email address if you're interested in applying to the Trading Angel coaching waitlist. I'm available for coaching on Nasdaq and US30, and Trading Angel coach Neil is available for coaching on Forex and gold. If you found this video helpful, make sure you give it a little thumbs up. I hope that it did change your life and everything gets a lot easier.